Thank you very much, Rupert. My name is Juliette Munro. I work for FSD Africa. My role is to chair the next 4 sessions over the course of the next couple of hours. So it's a simple role, introducing people, keeping an eye on the time, and so on. So I think there's going to be some mechanism to let people know, speakers and panelists know when their time is up, but perhaps I will also give a little wave and so on. We're primarily funded by the Foreign Commonwealth and Development Office, FCDO, as FSD Africa, and so I'm delighted in that context to introduce our first solo speaker. This is Melinda Bohannon. She's the Interim Director General, Humanitarian and Development at FCDO. She's worked for the UK Civil Service since 1999, so for many years, covering several high-level strategy, research and private sector-facing roles across wide-ranging geographies, including the Middle East and North Africa, Sub-Saharan Africa, and beyond. And she's also, her roles have included heading up former DFID's Economic Growth and Resilience Department and leading a team negotiating the UN's Sustainable Development Goal. So on that note, I welcome Melinda to the floor. Thank you.
Ladies and gentlemen, distinguished guests, it is really my pleasure to join in welcoming you to London for AFSIC's annual Investing in Africa conference. I am really delighted to give this year's keynote address as AFSIC celebrates its 10-year anniversary. In those 10 years, AFSIC has established itself as one of the most important investor events for Africa held anywhere around the world. And each annual gathering, as we've heard this morning, connects the continent's most exciting businesses with investors to transform ideas into reality. I want to start by underlining that this government truly recognises Africa's incredible potential. Well over 2 billion inhabitants expected by 2050, over 50% of them younger than 25. Africa will shortly be home to the world's largest working-age population and burgeoning consumer class. I have seen the energy and the entrepreneurial spirit across African countries with their potential unleashed by digitization and globalization, and they're generating growing savings. The continent already plays host to over $1 trillion of institutional assets that can be directed to productive sectors. Africa's natural resource wealth is massive, with vast holdings of critical minerals such as cobalt, graphite, and manganese, and many of these minerals underpin the global clean energy transition, placing Africa in pole position to respond to global demand. The Africa Continental Free Trade Area is the world's largest free trade area since the establishment of the World Trade Organization, spanning 1.3 billion people across the continent. This is an enormous and yet largely untapped market opportunity. However, Africa, like all economies across the globe, faces challenges, macroeconomic headwinds, particularly in the wake of COVID-19, and the food security implications of Russia's invasion of Ukraine are resulting in reduced demand for local exports and surging inflation and food prices. And as we all know, debt levels are rising, with repayments in 24 estimated to be 6 times their level from just 21, constraining investment. Climate change is also creating an urgent need for investment to finance mitigation and adaptation measures to support sustainable economic transformation across the continent. One recent report, published with support from the FCDO, estimated that Africa will need over £200 billion annually this decade for climate transition. But capital is scarce and it's expensive. Less than 1% of developed country finance is estimated to flow to Africa, while in 2021, advanced economies were able to raise debt levels with interest rates of around 1%, African economies saw equivalent rates hover over 5%, and those rates are now even higher. This is not fair or proportional to Africa's potential and its challenges. Our shared objective, our joint venture, is reversing that paradigm Only through partnership can we begin to reset the balance. And that's why our convening by AFSIC today and tomorrow in London is so important. Let me set out how the FCDO is approaching this opportunity. The UK is committed to mobilising private investment into Africa to drive growth, jobs, trade, and development and support the climate transition. We do this, for example, through our British Investment Partnerships approach, which brings together the UK's economic development and investment offer across a wide range of sectors. This includes working with our partner institutions, many of which are here today, while our DFI, British International Investment, has over $920 million of direct investments in Africa, 50% of its total portfolio. Our broader BIP toolkit invested in and mobilised £6.6 billion in 2022 alone, with 55% of this committed to Africa. We also lead the world in developing innovative instruments that work in partnership to catalyse capital. For example, the UK-supported Private Infrastructure Development Group, or PIDGE, was one of the first. It's made over $5.2 billion of investment commitment since its inception in 2002, with nearly 70% of that in Africa. Since then, we've expanded our toolkit, establishing FSD Africa, which supports capital market development right across the continent. Since first launching in 2017 in Kenya, FSD Africa has expanded to cover 20 African countries, generating over £1.9 billion of long-term capital invested in SMEs, sustainable housing and clean energy, with more than $1 billion for projects linked to tackling climate change. Directly or indirectly, these projects have created more than 50,000 jobs and increased access to clean energy, water and transport for more than 3 million people. And they've proven the commercial viability of green investment across the continent. I believe, as I know that many of you do, that vibrant, deep and liquid capital markets are essential for galvanising investment across the continent. The evidence to support this really is unequivocal, and the UK government has been active in support of this agenda for many years. FSD Africa is central to strengthening Africa's financial sector, and I'm delighted they're sponsors of AFSIC's 10-year anniversary conference, but we all recognise further action is required to deepen local capital markets and mobilise investment. At FCDO, we want to support new instruments and financing vehicles to increase liquidity, lowering capital costs, and build a pipeline of bankable projects. We need to improve regulation and information to reassure investors entering new frontier markets, and we will deliver this by building dynamic partnerships across Africa. Ladies and gentlemen, let me unpack all of this just a little more. Firstly, deepening local capital markets. Investment is best targeted locally via well-functioning local capital markets. First, we know this requires building the right capital market infrastructure, including public markets, vital for transforming liquidity. FSDA is supporting the imminent launch of the Ethiopia Securities Exchange, which we hope will be a game changer for the Ethiopian economy. It will help Ethiopian businesses, including small and medium-sized enterprises, the crucial drivers of growth, to raise capital. This will allow capital to be allocated efficiently, including through investment in higher risk classes. But alone, functioning local capital markets and optimal capital allocation are insufficient if we're to spur economic growth and accelerate the climate transition in Africa. We need to innovate with new instruments that can tap new pools of capital and demonstrate the viability of new asset classes. Take carbon markets. FSD Africa will showcase their work on leveraging carbon markets over the coming days. Projects in nascent areas like blue carbon and access to global carbon credit buyers offer inspiration to us all. Another tool in the BIP toolkit, the UK's Mobilist platform, will launch Africa's first dedicated climate fund, the Climate Energy Access Resilience, or CLEAR Fund, in partnership with Helios Investment Partners and the PIDGE subsidiary Infraco Africa. CLEAR aims to list here in London to attract new institutional finance for companies and assets that are building climate resilience in Africa. This is truly groundbreaking. I would also like to congratulate Mauritius in issuing its first green bond just a few days ago, again supported by FSD Africa. The bond will raise $45 million for a major clean energy project. This issuance is not only a milestone for the Mauritian renewable sector, but demonstrates how we can exploit an asset class valued at over $430 billion in 2022. This, ladies and gentlemen, is truly mobilizing finance at scale. Second, lowering the cost of capital. Even the most innovative financial instruments are of no use if the grit in the system prevents the deal from being closed. And nothing is more imperative than lowering the exorbitant costs of capital in emerging markets and developing economies, including in Africa. Guarantees can be transformative in making capital affordable, and we are working to expand that. Garantco, another company within PIDGE, is delivering local currency credit solutions, unlocking the potential of local capital markets to close funding gaps. PIDGE also pioneered InfraCredit, which provides credit enhancements to lower capital costs and crowd in private finance to support sustainable development. PIDGE deployed InfraCredit in Nigeria and now has helped launch Dharmana Solutions in Kenya and will do the same across East Africa, making sure that where finance is available, it is affordable. Third, building a pipeline of bankable projects. Supplier finance is only one side of the investment equation. Building a strong pipeline of bankable projects is another. This is critical for low-carbon, climate-resilient infrastructure. Currently, the World Bank estimates that the existing pipeline for sustainable infrastructure projects is just $1.2 trillion. This pipeline is essential to building food systems that are resilient to climate change. It's essential to reducing hunger and food poverty for millions while supporting incomes. So how do we close that gap? British international investment is blazing the trail, from an initial investment in a Zambian cement works in 1949 to a commitment just recently to invest up to $200 million in African hydropower. They have a long history of delivering on the continent. Over half their portfolio sits in Africa, and this commitment will not change as long as their support is needed. Last year, they drove the creation of the new African Resilience Investment Accelerator, ARIA. ARIA will boost investment in fragile states in Africa where private investment is scarce. And BII's higher risk Catalyst portfolio embeds this approach, testing new business models and launching innovative platforms. This helped social finance company MedAccess to support the procurement of critical medical equipment during the COVID-19 pandemic, taking early risk to demonstrate investment viability to private investors. And through our shareholdings in other DFIs, we encourage efforts to follow BII's model. To crowd in, not crowd out the private sector is our central message. We also helped years ago to establish AgDevCo, a patient impact investment in African agribusinesses that attract investment from BII, Norfund, and DFC only recently after our initial grant funding, taking action not only to mobilize investment, but secure and address shared global challenges from pandemics to food security. Leveraging our partners, fourthly, partnership is clearly inherent to UK's British International Partnerships offer. It's in the name. Any investment is a partnership, bringing an investor's capital together with a game-changing idea, a group of talented people, and a drive to get things done. And as the breadth of examples I've mentioned prove, all our work to support investment, to leverage it, and to make it work for Africa is pursued in partnership. In a world of constrained national budgets and global challenges that outstrip the capacity of public finance, there is no alternative route to success. And in this spirit, the Prime Minister will hold the UK-Africa Investment Summit in London in 2024. That summit will bring together leaders, businesses, and investors from across Africa and build on a 2020 summit that saw announcements of over £6.5 billion in deals. The summit will showcase our work in driving trade, such as support for the African Continental Free Trade Area, as I mentioned before, the largest FTA in the world. Our support has been influential in completing investment negotiations, improving freight flows along the Lagos-Abidjan corridor, and developing enhanced value chains between Ghana and Nigeria. I hope that conferences like this one today help pave the way to an even more successful gathering next April. That summit will be a further opportunity to cement the partnerships I spoke of, targeting our work towards the exciting developments happening in Africa right now. So in conclusion, ladies and gentlemen, these are just some of the examples of how we are making and will continue to make a difference in Africa's investment landscape. As the Africa Climate Summit in Nairobi last month underlined, significant challenges remain to mobilizing the capital funding required for sustainable economic growth. But that summit also underlined that Africa possesses both the potential and the ambition to pioneer a climate-positive pathway to prosperity. Forums such as AFSIC are central to us achieving this. As a leading investor in Africa, the UK wishes to be your partner of choice in this endeavour. I hope the various sessions, panels and networking events prepared over the next 2 days allow you to connect with our experts and allow us to hear your insights and benefit from your experience. We have participants here from the FCDO, from BII and FSD Africa, and our other investment programmes. All these teams are present. And I hope the conversations allow all of us to discover, develop and nurture a network of high-quality African business leaders and investors. For 10 years, participants at AFSIC have found out how much they have in common, a shared desire to invest in Africa's future and a shared understanding of the rewards that can bring. Today, we all recognise the urgent need to redouble our efforts, but we also share a commitment to doing so, striving together to get Africa the investment it needs, the investment it deserves in response to its enormous potential. Ladies and gentlemen, I wish you a good few days, and thank you very much.
Thank you very much, Melinda, and thank you very much to FCDO for your long-standing and committed partnership to FSD Africa, and we're very happy to be part of the bigger group of partnerships that FCDO and the UK government are supporting. So next up, we have a panel, Banking in Africa for Green and Inclusive Private Sector Development, and that's going to be moderated by Njord Andrews. So if you would like to come up, and maybe the panelists can come up as well. Njord Andrews is Managing Partner of Action Digital Transformation Fund. He brings over 20 years of wide-ranging investment experience, including through previous roles as Deputy Chief Investment Officer with Action's Global Investment Team and as Investment Director at Nordic Microfinance Initiative, which includes investments in Africa. At the Nordic Microfinance Initiative, he also served on the boards of many microfinance institutions and impact investing funds. So welcome, Njord.